advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. G'day everyone. Welcome to this week's edition of Bulls versus Bears. We're back to normal coverage. It's last week, JT, it was just the bear. I was here by myself. Kai,
was it?
I had to get out of here. You were camping or on the yacht, as we say. So the viewers and listeners had to suffer through me jibber jabbering. I wedged a couple of videos in there just to give them a bit of a break halfway through on Tesla. So we fanboyed out a little bit on some self-driving and stuff like that. But mate, welcome.
Yeah. Well, thanks for having me back here.
Thanks for having me. You say that as
exactly.
if you've got a choice.
Thanks for forcing me back on here then. Big week. We had that public holiday on the Monday. So 4-day week for people in New South Wales. And busy week this week. I think the main headline for me anyway, gold hit 4,000 and just briefly silver hit 50, was it 51 on the spot? Or either way it was new highs.
It depends on which Twitter feed you want to believe. All of the silver bulls they had a much higher number, just the middle of the road silver believers, we're just happy that it got through 50, I think. So yeah, but it wasn't there long. If you weren't up and watching it at 11:30 last night, you wouldn't have got your screenshot because it was straight back down to about 48 within about 20 minutes.
Yeah, true. I one thing I haven't checked is actually the open short interest in a lot of these, because I've just been long and thinking that's going to head on higher. But yeah, that price action, we've watched markets a long time, so usually if you're short, you put your stop just above a big figure, and obviously looks like they ran it right through that top there, and then straight away went back down. And usually when you see that, it's like, okay, that's a good place to enter because a lot of weaker hands are being flushed out. And that if it happens to make that either a newer high or a newer low, easy to manage the risk there. So not that I'm going to short silver, but that price action tells me that, there was some shorts that were definitely squeezed into that move.
As a long-term silver bull, as a former day trader, so I think it's probably done for the next couple of next couple of days, because it just was savaged below that level. They let it through, and then they just got the world's biggest sledgehammer and smacked it again. Mm-hmm. Normally sort of the price action you sort of start to see bounce back, but I mean, I'm not concerned in a long-term level. And gold was the same when I think it was Monday or Tuesday. US dollar was up, silver was down, platinum was down, but gold was just like, I'm going to 4,000 and I don't care what you do. It just was on a mission. And I think silver was a bit like that last night. I think someone kind of pushed it, hunted for the stops. I think, it's the quickest gain of $500 in gold's history, the last $500. I suppose it's not really, sounds like an amazing stat, I suppose, but when you think about it in terms of relative as a percentage, it's not, the higher it gets, obviously the easier it is.
Mm-hmm.
But it's, I had to get my calculator out for that one.
Yeah. And one thing I do want to just add before we go on is on the trade, I did mention that I stole someone's chart off LinkedIn actually. It had the highs in 1980. In today's dollars, silver was $199, and I think it was $112 in today's dollars in 2011. According to that chart, if you look at the non-adjusted for inflation, we've broken out to a new high. But in terms of actual real dollars, no, we haven't broken out to new highs. You just have a think about what
gold's the same, right?
Yeah, absolutely.
You adjusted for inflation. This isn't actually really a record high, but
absolutely. Well, you just have to think about what $50 probably bought you a house back in 1980, and probably an apartment back in 2011, and maybe breakfast now in 2025. It kind
Yeah.
of just shows you what $50 buys you now. So that's why, even though psychologically that $50 level is key on silver, the market sniffed out that inflation is here to stay, and the governments have to print. So this move, and this is what I said on Ausbiz, unless you think the government's going to be responsible with their spending, this thing's going to keep going.
Well, mate, and I've stolen that argument of yours, and it's the greatest objection handle in history, because it's like, do you think the government will get their shit together? And everyone goes, no, and they laugh. It's like, well, then gold and silver are just going to continue to go up. So, but I do think it's probably due. I mean, I remember when we wrote that article we were sitting here and everyone was piling in at Ausbiz going, oh, gold's a sell, gold's a sell. It was about a month ago, and we had the newsy, and I specifically wrote, it's not over. I think we've rallied 400.
Yeah, that was actually like the best point to get long, because like everyone just doubted it, and then just like, okay, buy that, and then straight up like an elevator.
But lineups outside of ABC Bullion and Martin Place, I'm probably thinking we're probably, that's pretty frothy.
Yeah, absolutely. Look, that's like, I don't know, didn't realize that there was a line out there. I mean, like, it looked like almost like a rent a crowd. Like, people are lining up to buy physical gold and silver. That's insane.
But let it be said that that's not fact checked. They could be lining up for sneakers, and some idiots just put it up there for like.
There's a Labubu store next door.
Yeah, no. I'm getting more and more paranoid these days. One of our clients.
Or it could be AI, like the stuff that comes out now, like that's computer generated. It looks so real.
But you couldn't see an ABC Bullion sign. Like, I got someone sent a Warren Buffett interview the other day on CNN, and I got about 3 minutes in, and fake Warren all of a sudden started to get like really blunt and like, and I'm just like, yeah, Buffett doesn't speak like that. And and then I cut and pasted into Google and just went, into Perplexity, just went, is this fake? And I went, yeah, yes, absolutely, this is fake. But he had me for 3 minutes, I've got to say. But he just went that little bit too fast. Tip for the scam artists out there, don't overreach. But look, as busy as it's kind of felt, there's been a lot going on. I mean, apart from the Nikkei, it's been...
Yeah, that's right.
We've notched a record high every single day, but we're actually down slightly for the week. So it feels... I'm surprised at that bar chart, and I know it's right because I do it every morning, but every single morning when I'm writing the morning report, it's been new record 3 out of 5 days.
Mm-hmm.
And the other 2 days it had an intraday record. So, and then we're slightly down. So all of the Fed minutes came out, and they were, all of those jostling for Powell's job in May all towed the Trump line. Yeah, we're going to get rate cuts. There was an interesting article about that GDP print that everyone is a bit bewildered by, being at 3.8. Harvard professors come out and said that 3.7 of it was literally data center expansion and resource buying.
Wow. So it just shows, like, there's concentration in the Mag 7, but it's even more concentrated in GDP itself.
Well, in the economy, yeah.
Yeah, exactly.
So yeah, and the Nikkei up, the first female prime minister.
Yeah. So did you have a chat about that last week? No, but
no. I saw the bar there. I think I may have said JT's wife's Japanese. We'll ask him next week, I think is what I said. But
yeah. So anyone that understands Japanese culture, they are the most stubborn culture in history. Like, basically anything traditional, they'll just stick with it. And just to have a female prime minister shocked the hell out of me. But the main thing is that she's an actual student of Abenomics. So basically, back in when Abe was in there, he was more print. Like, we got problems, just print. Print, yield curve control. And she's a big student of that. Main difference now is that when Abe was in there, inflation was negative in Japan. and now it's printing, was it 2.8?
for like 3 decades.
Yeah. But you sort of you looked at the latest print. We're running at 2.8 now. So her job is a lot more difficult.
That's 50 years of inflation in like one yearly print, basically, for Japan.
Exactly.
Well, wouldn't be 50, but it'd be 30 or 40 because they just had periods of deflation.
Exactly. So that's why the Nikkei has rallied to record highs. The JGB is at record highs as well. And
so
the dollar
JGB is their treasuries.
That's right. The yields on the treasuries are at record highs. I think the 10s are blown out. The 30s haven't blown out to a new high. And the last thing is the Japanese yen is getting extremely weak. So
which
eventually
is saving the dollar index.
Yeah, so
because
eventually when
Japanese yen is a big portion of that.
Yeah, absolutely. So it's you got the US dollar, you got Japanese yen, euro, and then the sterling. They're the main components of the dollar index, and the yen is getting belted. The Aussie yen, which is the one that I watched, that's because obviously eventually I would like to have another holiday in Japan, and that's over 100 now. So it's getting cheap. And the thing is, I think Japan is the holiday of choice for most people because the yen is so weak. It's the one place on earth where everything's still a bargain. Obviously with Australians, traveling to the US dollars always been a menace. But the thing is, like the cost of things in the US are just going through the roof. And we had friends that just came back and they said that breakfast over there, it's like $20 for a toasted cheese sandwich and things like that. And,
wow.
Yeah, it is.
But there's no inflation.
No. It's still 2.3. Yeah, and but either way, like that's it's concerning. But the thing is, the equities just do not care. As you said,
well, it's not that they don't care. It's just that if the US dollars were not worth as much, you're giving away real gains or wealth, I suppose, because it's essentially just rising on money, on expanded money supply.
Mm-hmm.
Making 20% in a stock now is like worth only making 15% 20 years ago because you've got, so I mean that's a part of it as well. I think there's a bunch of charts about pricing the S&P in gold and all this sort of stuff. I don't want to go into that. This is unless we might start marketing ourselves as a sleep app for the podcast, we won't go too far into that economics. But just a really quick one.
What's this chart here, Mark? This red flag.
So first brands was it's very hard to describe without swearing. So when Lehman Brothers went under in the GFC, is making a comparison there. So mortgage back, for those of you, the best example you'll ever see, Margot Robbie in a bath, just in The Big Short, sums up the GFC the most perfectly I've ever seen. Apart from the fact she's attractive, but there's also some great examples in that movie. But essentially, the mortgage-backed securities you described as Jenga, and essentially you put your AAA bonds at the top, and then you just stuff in a bunch of crap at the bottom. And if they start to default, obviously your tower starts to fall over. So private credit, and I've said this before, is mortgage-backed securities just with a different name, a shiny new wrapper, and the banks aren't allowed to issue them anymore. What could go wrong? Hand it to the private sector to manage instead of the banks that are regulated. This will be a disaster. Basically, there's about 25,000 SPV vehicles that all go in a massive circle, and there's lines everywhere, which I should have put on here. But basically, it's the world's most complicated structure. Again, to sum it up, imagine you've got a lovely brownie, and that's been cooked by the best pastry chef in the world, and it's great, and then someone just hoiked dog crap all around it. That's essentially what this private credit SPV was, and what this example does is it's like liquidity is a big thing. So everyone goes, oh, I'm getting 12% private credit, blah, blah, blah. But liquidity. And what this shows is when the rug gets pulled, not only is there no floor underneath, there's a trapdoor and there's a well underneath the rug that you fall down. So basically, they're just sitting there trading at 100 would be if the bond or whatever the instrument was yielding 0. So obviously it was yielding around about this 10% mark here, trading at 90. 2 days, all of a sudden your money's worth 90% less. And you cannot get out. So then you go, and the comparisons of, it's just a yielding bond, it's just a yielding asset. So, it's not. Yeah, it's not really comparable to banks and bank deposits and things like that. So the blue, and then Lehman's was exactly the same thing, and Lehman's ended up falling over. These credit spreads here. This is a good little website that I just keep a bit of an eye on. This was the second bar, the lowest credit spreads were at the lowest. So that means basically for a junk bond, which is crap, versus a treasury, which is backed by a government, the difference between the yields was the lowest it's ever been, which is usually a sign that the market's getting a little bit frothy, or sorry, overly bullish. And you can just see here, so the orange line is the S&P, and then the blue line is credit spreads in the last 5 days. And you can just see they've gone whip and started to converge. They are still historically very low, but you just need to watch out for this. We will keep an eye on this, but it's not a red flag. It's definitely worth monitoring because Lehman, there was a couple of banks went under, like there was some second tier ones and everyone was like, who cares, they're second tier. And then when it was someone who was quite big, UBS obviously brought their risk manager over from Credit Suisse, which was a mistake because they're 30% of this, the idiots. But yeah, it's just one of those because if it doesn't matter how much money gets printed, what we saw in 2011, 2007 to 2011 is if people stop lending to each other, the whole system freezes, and then it's gone. So it's kind of like we'll regard this as a bit of a smoke alarm. This could be an isolated incident, but it may not be. So we'll just keep watching it because I've had concerns around that for ages, and it just is. There's too much commission being paid out to people to place these deals for there not to be some higher risk assets than what they're saying stuffed in these baskets. So
absolutely. So I watched a good podcast with. So he was the main guy in The Big Short. Good interview, but he explained, in detail, his trade during the GFC, and it's really good interview. I will probably do a little summary of it and then post it there. I think it's worth trying to get the point across. But he thinks private credit's the next level. So you're saying it's just basically private credit is mortgage-backed securities.
They've literally just renamed it.
Exactly, and he's thinking the same thing as well. And what he's mainly saying is that it's not just the off-bank lending as well. There's VC money in there. There's just basically everyone's just taken this whole concept where everyone's getting 10-12% returns, and everyone's marking their own homework, and it's all fun and games right now because obviously the repayments are still flowing, but if that stops, those marks have to come back to reality. Yeah, interesting times. As I said, equities don't care for now, but as you say, you have to dance
and
quite
look,
near the exit.
It was a similar situation. 7, no one cared. Like literally 2 major banks in the UK and in Europe fell over and everyone just went back and went back up. And then obviously, and then Lehman and everyone fell over and it was like, so the best analogy I can probably give is get a seat close to the fire exit, basically, just in case you don't have to have to throw your hands in the air and go, "There's a fire, everyone out!" But just sit near the exit just in case if something something like that comes along. And I have actually managed to get up this example because this has been a pretty good little discussion. So this is the vehicle that had this thing. Like, I mean, I've seen some complicated diagrams in my day.
Right there.
Yeah, so it's just supposed to be simple private credit, man. So I'm like,
so this is just like that circle diagram with OpenAI investing in Nvidia.
No, this is way worse. Sorry, that's 4 separate diagrams. They've all this is 4 layers, all to hide this crap that was red. So the deceit is intended, whereas that diagram, which I did put up last week, of all of the Oracle and Microsoft and OpenAI all sharing money, as long as everyone doesn't apply a sales multiple every single time that 100 billion changes hands, that's all well and good. That's the economy, that's business. No, this is like this bit, and then you go down, and then it's this bit, and then it's this bit, and then at the bottom here is this, here's your nasty little surprise. And the nasty little surprise, blew everything up. So, yeah. And we haven't done Kramer of the week for a while, but because, and I'm going to defend Jim here. He's been on fire this year. He called Tesla at the low. He's been on Palantir. So, all the haters on Jim, they're very selective, but this was just like the piece de resistance of classic Jim Cramer. I think this was on the Tuesday or something like that.
He's a confirmed gold bug for 4 decades. I've never heard of him actually say he's been a stocks guy.
Neither have I, but he basically called gold to 4,000, and that was the high. Sorry, it's going to go well beyond 4,000 or something. And I think the same night Goldman Sachs called gold to 5,000, and I was just like, because Goldman's would have told all their clients months ago, or if not 18 months ago, like we did. When they're telling the general public that it's going to go to 4,900, it's because they're on the offer selling it to you because they want to get out.
Exactly.
But that was just one of the classic Jim Cramer moments, and we haven't had this segment for a little bit. But he, Jim's back, baby. He's was like, look, economics, you may as well throw out your books these days. It's been the weirdest year in the world. Jim Cramer's been nailing it. Asset prices are at record highs, but we're cutting rates. Trump's torn the world global trade apart, but he's bombed a country, then asked for the Nobel Peace Prize. Like, I seriously think I feel like we're in bizarro world. So at the moment,
we've got peace in the Middle East. That's the most bizarre thing ever.
No, that's it's 3:30. So based on the average, someone's broken that ceasefire in about the last 20 minutes. So, but I just thought, it's like a little security blanket. Thank God Jim's wrong again because the world really wasn't making a lot of sense. But yeah, so Tesla got a bit of a belting, but was kind of up the previous week. And probably
I didn't realize Tesla pulled back that far. I mean, it's had a great run. 7%.
Half of the course that I did a whole feature on Tesla last week, and it drops 8% this week. Healthcare was still really positive. I think that sector may be out of the woods for now, off life support. Excuse the pun. There was no news in any of these, except the emerging bromance of Jensen from Nvidia and Elon. This week there has been some serious love between those two. Jensen basically says they invested in XAI, which we'll bring up another point about that in a minute. And he said, anything Elon's doing, I'm in. Basically, that was his legitimate statement. And he said what he's doing in AI, and apparently tried to buy more of XAI. So So yeah, everyone laughed at Elon for buying Twitter for 44 billion, which it was kind of funny because he didn't actually want it. He sold it for 46 billion, but he's used all the data, created XAI, and it's now valued at 200 billion. So the man can make money out of anything. It is just he's a time traveler, a gypsy, a fortune teller. I don't know what he is, but yeah. So they announced they announced the low cost model, which was met with lukewarm response at best. Basically, still 40 grand basically.
What do you mean by low cost model? Is it like low cost processing or?
No. It's the lowest cost Tesla ever. Like it's 40,000.
Okay.
So it's a model. There was a Model Y and a Model 3, and it was a bit hyped up. But everyone's just waiting for the robot announcement, basically. And there's been a lot of like little leak bits and pieces coming out. You've got to be a little bit careful again for the fakes, because Grok's Imagine engine is making it really easy for even rookies to just do fake videos these days. But there wasn't any major, and well, obviously AMD, which we are on here at MPC, up 38% after that.
Yeah, well done, Richie.
Which is, yeah, Richie. Shout out to Richie. So yeah, very, very smiley clients at the moment. There's been long AMD, gold, Tesla, silver. Like we managed to buy healthcare the other day, so the boys are running white hot at the moment.
Like Clarity's just bounced this week as well.
Yeah, Clarity. Shout out to Shane Davis. He always gives me crap about that one. So just that was trade of the week that went pear-shaped. We didn't update. A fellow who I converse with quite often on Twitter. Shout out to Shane or Eddie Light on Twitter. But yeah, we're trimming here at the moment, mate. So for the love of God, don't buy any up here, right? So the bottom of the range is $3 for us, which, you know.
Well, the thing is, like, there was a massive short position on Clarity, so I'll be interested to check out Shortman and see if that interest has gone down. Because as you said, it seems like whoever was short might have had to get out over the last few days.
I would imagine so, but it's still at number 30. Yeah, it's down. Yeah. I'm just having a look at this now. Yeah, it's dropped from 8% short to 5% very, very fast.
There you go.
Yeah. So that's someone getting cooked and probably fired at a prop shop somewhere for doing a dumb trade. So, you know, unfortunately, if you don't do your job. So yeah, but anyway, but it wasn't anything really outside of that. Micron and the chip stocks continued a bit. There was nothing really in Nvidia, but we've got bank earnings coming up next week as well. So
that's right. Well, that's the thing about following the US. We have earnings pretty much every quarter. Not every quarter. It is every quarter.
Trump wants to bring it back to 6 months. I feel like writing a letter to my congressman, and I don't even live in the States. That'd be a disaster. I love quarterly earnings. Yeah, no, sorry, go on.
Yep. So commodities and FX. The big news is gold hit 4,000 at the beginning of the week. Silver hit 51 or overnight.
Thereabouts.
Copper had a massive move back at 515.
Yeah, Platinum. That's it, and over 11,000 on LMA. It's like I feel like I've neglected one of my children, but copper's been on fire. It's just
yeah, absolutely.
It's just that silver's been sort of been attention seeking.
Man, have you? Fair enough, the copper's rebounded, but what actually preceded it was all of the copper stocks on the ASX, and we're talking not the greatest
except
copper.
BHP.
Exactly right. So BHP is the best one. That's actually not done anything. Rio's actually bounced, but have a look at Sandfire. I think Sandfire's up. It's gone from 12 to 6. So what's that? It's up 35% in I think a week and a half. Just a massive move.
And just for context, folks, ASX, the great mining exchange of the world, global copper ETFs up more than our best copper stock, and BHP is the stock weighing the global copper miners down at the moment. But with iron, like by this year or next year, copper at these prices potentially may overtake iron ore in terms of revenue for BHP.
Wow. Okay.
There was a pie chart. Don't quote me on that. I've had a bit of a rough week. I screwed something up on Ausbiz the other day and had to do a retraction. No. Copper prices extending and iron ore prices largely staying fairly stagnant. It's getting to near 50-50, but whereas it was
I dare say though more... that iron ore is a much
Rio would be better.
No, but I'm just saying, in terms of margin, I dare say iron ore margins are much higher than copper. I mean, like,
copper's got $3 to go.
Well, not just that. Like, if you have a look at like all the major copper deposits out there, they're all at end of life. Whereas, fresh iron ore pits are being found here and there. So what I'm saying is there's a lot more margin in iron ore versus copper. So if copper were to be the same revenue line as iron ore, I still dare say that there's more money in iron ore for BHP. But either way, if copper does jump $3 a pound, that could change things as well. So just going back through the chart, lithium's actually recovered really, really well. Pilbara, Min Resources, and Liontown all recovering nicely. So pretty much the whole commodity space doing really well. Bitcoin made a new high as well, 5 or 126, depending on which exchange. It's fallen back to 122. One thing that I have noted is that Bitcoin's made a new high, but all of the other alts have not made new highs. So interesting moves in crypto there. But as you say, guys, crypto's changed. It definitely is not as volatile as it used to be. And there isn't the next wave of sort of new coins that are getting headlines.
It's too mainstream now, man.
Yeah, what I'm saying is like there isn't the next. I remember the last one was like useless coin, or there was a fart coin, and you go from zero to multiple billions in market cap overnight. I'm not seeing that at the moment, but I think Trump coin was the last one that made that last move. But the surprising thing with all of this is that US dollar has actually increased. Even though gold's hit record highs, silver's hit record highs, it's definitely not just against the US dollars. Yeah, stronger against all currencies across the board. So that's commodities
and you left out your...
Oh yeah, platinum. I think platinum's at 17-year highs, and palladium's at like a 2-year high as well. So even the other precious metals are doing extremely well.
So I did an eToro event about, it was the start of the year, and then, I did a 2025 outlook. And I said, I think palladium, and palladium was $1,000 or something. So it's up like 100% or more, or thereabout, a bit, or 80% or something. And then I mentioned it at the event where it was me and Henry Jennings and one of the most followed eToro people. And I said, I think palladium's going to go for a run. And I got asked loads of questions about it, but unfortunately the question was, what's palladium? It wasn't why. And one person just thought I mispronounced platinum. So, but anyway.
Well, just going back to palladium, I remember having this discussion years ago, like, what do we actually use it for? And the only, like, you go back to Google and basically catalytic converters. Like, either way, like it must be still.
It's also used in electronics as well, but I think the main issue with those two is that Russia and South Africa control well in excess of 90% of the supply chains or of the mining of it, so you can't really get it anywhere else. From anyone else, basically. That's where, and platinum used to be way higher than gold.
Yeah, that's
used to be 5 times the price of gold.
Yeah, well, platinum was 800-900, and gold was maybe 200 or 300. When I first started trading. I have to go back to the charts and double check that, but yeah, it used to be much
I'm sure. Well, I'm sure when I'm sure in late 90s when I was a young buck, it's like platinum was like 1200 and gold was, they were cheering because it broke 200. So anyway, Jesus, that just shows how old I am, basically. Back in my day, trade of the week. So, for all the palladium fans out there, we've got a new commodity for you. It's for the Australians. It's antimony, and for if you speak the Queen's English, it is JT.
It's antimony.
Yes,
I've actually
tomato.
Exactly. I actually went on a YouTube channel and it did the same thing. It's like it can be antimony or antimony, and they're just like, well, thanks, buddy. That didn't answer the question at all.
Yeah,
but
everyone
anyway,
everyone on Ausbiz was super stoked with antimony until you started saying antimony. I'm blaming you, mate. Like, because you've confused
do people actually listen to me? Do it?
It's right, yeah, no, but I think Nadine, she goes, yeah, Jonathan really threw me off, like, and I'm just like, yeah, he's got me as well. I said, I've been Googling and fact checking it, and there was no right answer.
Yeah, exactly. But either way,
so it's potato.
Yeah, so trade of the week. This is one of those ones that I guess when you're on the hot streak, you can make mistakes and the market can still reward you, because on that first spike there was news that the United States government was going to inject money into US Antimony Corp. Actually,
no.
They're buying their production.
They're going to stockpile. They're going to stockpile, and they pre-purchased $300 million worth of something.
Yeah. Okay. So, but either way, and you said, "What do you think about this?" And I just said, "Hey, that's another MP Materials situation."
Yeah, that rare earths play. Yeah.
Yeah, exactly. Clearly, slightly different. So we bought it the next day. Bought it on the open, and that was the high
bought it. Thinking it's going to go with momentum, and then we spent 5 days biting our fingernails and being a fair bit nervous, and then it just took a week to make 43%.
Yeah, exactly. So, as I said,
and that was with a not an ideal entry.
As I said, like, when the markets make you look good, you just have to roll with it. But we took profit on last night. I think on average, the clients made, let's say, anywhere from 30 to 40%, depending on their entry and exit.
If they didn't pick up their phone the first day, they made probably 45.
Yeah,
that's a big red bar. And look, of all the people in the world that should make money out of a resource run, is Australians in junior mining. But yeah, there's a lot of small cap antimony miners here in Australia that one fellow Agro on Twitter sends me a fair bit of information about. But we can't turn around to the clients and go, by the way, here's a commodity you've never heard of. Would you like to buy like the world's smallest miner? So we went with the big name in the US. Then it had the announcement catalyst and things. So now everyone's made some money and they're familiar with it. They can probably go down the market cap scale if they choose. But yeah, so it's one of the things where, I mean, we're watching it like a hawk every day, markets every day. Like sometimes we assume that people know stuff, like the palladium story, but I'm going to put my hand up and say, had no idea what this was until it came up in the news, and then I had to put it through GPT. And I probably should have. I mean, I would have read. I knew I would have read over things because it's involved in the defence sector and hardening artillery and blah blah blah. But I sort of glossed over it as like you could have been a composite metal or something like that. But anyway, so even at 30 years in, you can still learn something new.
Oh no! Well, that's the thing about trading. There's no way you'll know everything. I think the key to a lot of this is like you just have to, the main thing that we did right for the clients is that, I did say it is going to be volatile. Don't go with your normal size. Reduce the risk and trade smaller.
Well, yeah, because if you traded normal clip size, people would have freaked out and stopped out. I'd say, yeah.
Yeah, exactly right. So while we got a little bit lucky on it, it's not like we backed up the truck and said, yeah, this is definitely going higher. I think it just crossed a billion market cap on that announcement, and a billion market cap in the US is extra small cap.
It's micro cap. It's
exactly.
legit micro cap.
Yeah, so you got to
you get into the ASX 200 at 1.3 billion.
Yeah, exactly right.
So, actually, Aussie dollars. One thing I would like, it's one of the underestimated things, like, and the strength of our team, and this is going to sound like a sales pitch, but it's why we don't, like, I'd like that anyone who works here has got to be from a markets background. Is like, it's no one ever talks about risk. They throw out a buy recommendation or sell recommendation. There's no allocation size. There's no stop loss. There's no risk management. There's nothing. Like, and that's literally about 80 or 90% of how you make money is
exactly. Well, that's the thing, is that I think we just take it for granted because we've lived and breathed it for so long. But yeah, you're right. It is what we think is the most important parts of the actual trade. Most other analysts, they just buy this because it's going to go higher, and you're like,
it's a great company. Like, well, price matters, and yeah, when I had the trading academy and I had my prop operation, I'd sort of give talks on this to the new recruits and things. And it always, in my head, it always just felt like I was about to break into Kenny Rogers the Gambler. Know when to hold him, know when to fold him, know when to work. But there is some truth in that, albeit that he wasn't talking about investing your super. We do take it for granted, but that's, like I said, having the smaller clip size is probably the reason we stayed in that trade, and allocating something to a big allocation to a small cap and then it slips on you is like one of the biggest mistakes you'll ever make. Anyway, moving on. So just for those who are very picky and detail orientated, this is last week's, but it hasn't moved. It's at 49, but like nothing.
Well, it hasn't moved for weeks.
For 3 weeks. So I got a little bit over it, and then that junk bond demand, the credit spreads have widened out. That's to do with that garbage that we spoke about at the start of the podcast. So, but no, nothing. None of the other metrics have changed. We're at 49. It's Columbus Day on Monday as well. So
and we have the bank earnings on, and earnings start on Friday as well. The major banks.
BlackRock tonight, and then no. The bank earnings start early. Actually, it's like from Tuesday.
Oh, is it? Okay. I
was super surprised. Yeah, no, it normally is all stacked at the end of the week, but.
And just curious, I mean, like I wasn't here last Friday, but did the non-farm numbers come out?
Nope.
Okay, so
nope.
Everyone's got a job.
No figures. I mean, not that the market was paying any attention to them anyway. They just pick out the good bits essentially. But like, it is what it is. Like, but weirdly, they are starting to focus a little bit on fringe numbers, and now every time one of the Fed guys speaks as well, they're basically trying to read into the numbers like they know what the economic data is. Where it's on hold basically. There's my theory is the quickest way so all government employees are not getting paid, including soldiers. Strangely enough, Congress and the senators are. I think the quickest way to solve it is stop paying Congress, the same as every other government employee. And you watch this thing get solved in about 3 hours.
That's it.
So yeah, I've got I'm going to bring the calendar in the next slide. While you're doing that, because it is stacking it up.
Yeah, what's your call for next week? Were you bearish last week, or what was that? What was the official result?
Well, we're down 0.25%, but I said
Okay.
I think I said I was bearish, but it won't be. It'll be plus or minus 0.5% or 1%. So yeah, but I mean, it was a wishy-washy call. It's not. I'm not claiming it. It's not worthy of claiming, to be brutally honest. Because I just thought I didn't really know more than I had a strong opinion. So yeah, but but I just mentioned that I thought the gold and silver were going up. So, and it does look like it is running out of a little bit of steam. We keep doing those records, and then it doesn't really keep going any higher. And people are a bit sus now about like but there's still, for me, there's still too much talk about it's a bubble, it's a bubble, it's a bubble. So there's loads of red flashing lights, but I'm not entirely sure that it's going to go anywhere. I don't feel like it's going to go down until we at least get some figures back. I mean, why would you do it? Make a major move as a fund manager until you get your economic data back.
Yeah, fair enough. With that, I'm going to say that I will go with bullish for next week. I just think it just keeps inching higher, grinding higher for another week.
I'm going to go bearish, and
Okay.
I'm not a.
Is that a 1-star or a 5-star bet?
So the average shutdown's 8 days.
Mm.
We're at day 10. If it goes for another week and Trump's digging his heels in and things like that, we're not getting the same sort of genuine follow through. I mean, AMD got that follow through this week, but the market's a little bit lethargic. I think there might be few more tariff effects in some of these earnings results this week, and they're going to come back from a public holiday and no economic numbers, and yeah, so and that uncertainty eventually is going to, because I think, like me, everyone was like, they'll sort it out. This is a circus. It's like the last time, but it's dragging on pretty badly now, and like to the point where I'm watching Bloomberg in the mornings. One senator attacked another senator as he walked out of a meeting and ambushed him with a news crew. Like it was like it's like schoolyard bullying stuff. And Trump's just like throwing petrol on the fire and nominating himself for the Nobel Peace Prize. So I think they might find it a little bit difficult to go the wall of worry. TSMC, big one for us this week coming up. So yeah, we're holding that. And
they got Intuitive Surgical as well there.
One of our new structured products. Intuitive Surgical as well. Yeah, one of our faves hasn't. I don't know. It's a high conviction, but we covered it. I don't think it's ever really reached the buy zone because it was an extraordinary PE. So with our high conviction trades, you don't necessarily. We like the company, etc., but we won't recommend buying it unless it's cheap.
Mm-hmm.
But it's still we still have high conviction that the company will do well. It could be due for a run, to be honest. I think because it's been pretty flat for a while, so maybe that PE might catch up. Who knows? I don't really know.
Didn't you say to sell CBA by JP Morgan? So we'll find out if you're right on Tuesday.
Yeah, no, I did, because CBA's price to book is double JP Morgan's. Its shareholder earnings yield is half of JP Morgan's. Its PE is double JP. There, basically, anyone who has but again, I did say, I think at this point we throw out economics books and valuations books now. Just follow charts. But no one in their right mind would choose CBA over JP Morgan at these valuations, because it is quite it's quite alarming, just the disconnect. But anyway, it is what it is. The mindless green robot never loses when that passive flow comes in. But that pretty much wraps it up, I think.
Yeah.
We'll speak to everyone next week, and hopefully we've got a US government back. some economic numbers to talk about. Hopefully, someone doesn't blow up another SPV, and we have to start running for the hills. So, thanks, JT. We'll speak to everyone next week.
Thank you.